Hey all, welcome to ShareTreck. This is Sandeep here. And today we're going to talk about a company I have been bullish on and seemingly wrong on. But let's talk about it. Let's get started. Welcome back, friendos. So people ask, Sandman, why the frell do you read earnings, listen to earnings, rather than just look at the numbers, rather than just see the margins, which you tout a lot about, and talk about those fancy peg ratios? It's because earnings numbers don't show everything. The numbers don't show everything. Some things, sometimes you just have to read the earnings, listen to the earnings, listen to the management, hear how optimistic they are to best evaluate the stock and see where it's going, the trajectory in the future. By hearing or reading company earnings and what is expected from where their revenue dollars are coming in from and where those dollars are going out to, what they're spending on, we learn a lot. The market prices in everything, events 6 to 9 months ahead of time, usually. And Intel is one of those companies where if you were looking just at numbers alone, you wouldn't have read the entire story. In fact, just in the last 2023, which passed, Intel appreciated almost 90% in share price. And if folks had paid attention to some of the earnings, you might have gotten a little bit of a hint of that, a little bit of a taste of that, which is wonderful to know. Many of our viewers may ask, Sandman, why Intel? Why this boring computer company? Why not a company like NVIDIA or AMD, these super growth, huge AI players? What I really like about Intel, to be honest, everyone, is it's kind of a form of pseudo diversification within the semiconductor space, where, and I will get into much more detail about this, but first of all, let's do what we like to do a lot and do best here at the ShareTreck channel, and that is look at their earnings and look at their financial ratios. So I'd first like to share a little bit of the screen. So first of all, I'd like to show off the screen right here. And looking at the earnings, there's not very much too impressive going on over here. Like if we take a look at their net margins, there's nothing very impressive going on. Looking at their earnings multiples, their PE is very, very expensive. Price to book, not too nice. Price to book is not too bad, but looking at some of the other ratios, price to sale, seems kind of boring. It seems like it's not doing too nice. Many of their enterprise values, you're gonna have to take my word on some of these. It's not too impressive. And we have this thing called a DuPont analysis, which in the last video I was talking about how the enterprise value over EBITDA is one of the greatest and most accurate measurements that a lot of institutional and hedge fund investors use. Looking at some of these ratios, they are seemingly trading quite expensive. And their sustainable growth rate, which if they were to implement every part of their resources without taking on new debt, doesn't look too nice, doesn't look too impressive. So Intel, from the sheer numbers perspective, is not a very enticing company. But that's why we look to the earnings, specifically the earnings call, and hear from the management. And as I listened to this, what I found out was pretty intriguing. First of all, Intel, the thing we want to find out a lot is how is the demand for chips and how is the demand for semiconductors going? Intel first talks about that they opened up the Fab 9, which is a new manufacturing facility in New Mexico, just opened up about 2 weeks ago, and it cost Intel $3.5 billion. New manufacturing facility, that is usually a good thing for the future most of the time. They say that the demand they have benefit from a huge surge in AI and their revenue is increasing and market signals positive for PC's true total addressable market as demand grows. They say single digits in 2024, but they will say double digits thereafter, further on. What is very alarming, I heard, is they expect a first quarter drop in IFS, which are foundry services revenue, because of a weakness in wafers. Wafers is a type of part in many of these chips. And this is very surprising because thinking about the AI boom, you usually think, hey, people are buying much more of these AI parts to get the AI chips. In short, what I learned from many of these after digging much deeper is sales on their old goods, their old stuff is slowing down as they are transitioning into AI chip manufacturing. Intel starts talking about ramping new chips and testing new chips and starts speaking much more about their new chips, which made me a wee bit bullish. Intel is betting heavily on the new fabs, the new manufacturing facility to make AI chips and are waiting for them to generate a huge amount of revenue. But you got to have a long enough outlook to be considering this. Um, Digging a wee bit deeper, commitment. This was very, very good to hear. The management says their commitment to break even cash flow in the second half of the year, despite all this spending, is great. So in the second half of the year, they plan to be free cash flow break even and start going positive thereafter. Despite how much spending they're doing, that is quite positive. Now, this, I believe, was the big key to the entire earnings call when I went through all those pages. Buried deep in the earnings call, Intel had this line. It said, the company recognized $835 million in advanced manufacturing investment credits from the CHIPS Act. Wow. That is almost $1 billion in free money, free government money in just a quarter. The government is, in conclusion, or like in summary, government is propping up Intel with CHIPS Act money to make AI chips. So I am quite bullish on AI from an investing perspective. And I think there is growth from what I hear in many of these other earnings, like from Oracle and from NVIDIA and AMD, so on. But this just makes me incredibly optimistic about this because Intel is not needing to spend much of their own money because they're getting free money from the government. The government is propping up Intel and paying for their spending almost for free. Intel is saying, further on going into their earnings, Intel is saying that revenue is down in, this is my summarization. Revenue is down because their old stuff and their old sources are selling much less because they are having to write down a lot of their old inventory, but plan to be cash flow positive in second half 2024 because the government is bankrolling the growth of Intel almost for free. They say that data center revenue is in decline by double digits, but plan to improve for the rest of the year. And the one very astute member of the earnings call asked the question that TSM, their largest competitor, in my opinion, is doubling down on the availability of advanced microchips. How do you plan to respond? And the management team rather quickly says, we're making our facilities here in America. Maybe that is appealing to a little bit of the America populist side, but they're saying American made and American run rather than foreign, which can bring in a whole bunch of other risks, which I'd like to get into a little bit further. As I said, Q1 this quarter, upcoming quarter, and which is why the stock fell, by the way. They say it's looking to do a little worse, largely because of the inventory write-down. And they also say that their peak startup costs are going to be in 2024, this year. They're doing a little bit of number crunching. Their top line growth is about 12%. Their bottom line EPS growth about 40%. Now, this does come with a lot of risks. The primary risk I like to think is we got a few more macro related risks. First of all, the macro risk has to do with politics. And in January 2025, America might have a new regime coming in, which might be not as bullish on chips and funding some of these things like the Chip Act, which Intel has extraordinarily benefited from as the current regime. But that is an issue that we got to consider. However, for now, we can still rely on a lot of chips accurately. So people ask, Sandeep, why am I so bullish on Intel despite these macro factors? There's another macro factor that makes me more bullish on Intel, and that is that Intel is the only American manufacturer of advanced microchips, and they're being bankrolled by the CHIPS Act of the current administration. Now, Intel is pretty great where it's not a cool AI growth stock, and I'd like to see it. It's although it's commonly talked about and not compared to the likes of AMD and NVIDIA and Oracle, it's not an AI growth stock like AMD, NVIDIA, and Oracle, or even Microsoft. I see it much more as a manufacturer, and the competitor that I can compare it most with is TSMC, Taiwan Semiconductor Manufacturing Company, and even to an extent ASML, although ASML, the Dutch company, is a supplier of parts for many of these chips manufacturing companies. ASML supplies a lot to Intel. Just last year, Intel bought billions of dollars of materials to make their fab facilities and make their manufacturing facilities for these chips. So I don't look at Intel as more of the traditional AI play, traditional AI server or chips or GPUs or graphics the same way I do AMD and NVIDIA. I look at more so as the company that's going to make the chips and supply them to AMD, to supply them to NVIDIA, supply them to companies like Tesla and Apple. Make the companies to these, sell them the chips and have these companies do their AI, do their operation, do whatever. And what is another thing that is kind of makes me a little bullish is TSM no longer has the monopoly they did about a year and a half ago on, even a year ago, on advanced microchips, on these chips. Intel is the new player, and they're being funded by the American government. Thinking more so on that, TSM, Taiwan Semiconductor, they are making a facility in America, but there is a little bit of risks with having an overseas manufacturer where there's political risk, there's the risks with whatever could happen with Taiwan, what could happen shipping some of these things overseas, the costs associated. We know too well a lot of the things that can go wrong and do go wrong in bringing things from one part of the world to another part of the world. But Intel, you don't need to worry as much about that, as much thinking more so on those lines. Now, what I'd like to do is think more so on the side of numbers. Pardon me. So what I have done here is I got this wonderful website called NASDAQ. This is the same company which when you're thinking of, it's a company that tells you a lot of the forward earnings and forward estimates of EPS of some of these other metrics. And I plug those into our stock growth formula. As you see, Intel right now trading about $43, which has appreciated significantly from that low of in the 20s just a few months ago. Expected end of the year EPS, which we pulled directly from that NASDAQ site around here. And we're thinking about a forward PE, which is very expensive. It's up there with companies like AMD, with companies like NVIDIA, and so on. But the expected growth rate of this is about 40%, which we got from considering their earnings and doing a little bit of math, giving them a PEG ratio of about 1.49. It is not incredibly cheap. It's not a super cheap company, but that's a pretty nice PEG ratio. That's a PEG ratio much better than companies like Apple right now, like Costco and Walmart, which I'm not too bullish on. Really good. Nice to consider. Before we carry on, there's one thing that I would like to also introduce to our viewers, and that is I talked about this a little bit in the last video about Netflix. Take a look at that if you haven't yet, which is I've got something called a discounted cash flow, and I'm going to get into my gripes about this. So this is their annual statements. Now that we've got annual statements out, it's the best time to run some of these little metrics. I borrowed one and then changed it around to make it mine, but these are consolidated statements of income that I got from their balance sheets and from their revenue from their financial statements. I just plugged in the numbers right in there, 40% growth rate. Considering the growth rate of some of their peers, I use AMD, NVIDIA, ASML, and TSM. And I plugged in a bunch of the numbers. And according to this, it's compounding a year-over-year annual growth rate, considering all the factors, about 18.65%. And in 2026, the company is expected almost double. I think, my opinion, there's a lot of problems with discounted cash flow. It doesn't take into account things like advances in technology, advances making companies more efficient, um, other ways to increase much more revenue. But this is a great little ways to get started. I'm not the biggest fan, but this is a consideration. And if you want to know more about this, just let us know. And I'll do a lot more of these DCF things. I find a lot of these fun, time consuming, but fun. So, in conclusion, if we were to wrap things up, because I know we got a lot more companies to do and a lot more to consider, Intel, the value is how quickly they can do their ramp, how quickly this company can bring advanced microchips to the market and make these partnerships with companies that really need chips, really need these parts. And that is where the big value lies. It's not going to lie on the growth in AI, which AMD and NVIDIA have capitalized upon. Same thing with things like Tesla and Apple and Microsoft, or even Meta. It's going to lie in manufacturing. And I think that makes it unique, makes me bullish on the company. A lot to consider, but a lot to put in your mind and think about. It's a way of also diversifying the semiconductor industry, not just AI makers, but also manufacturers. But what do you all think of America's darling right now, Intel, which is being bankrolled by the American government? Very smart company. And one thing I forgot to mention, pardon me, Balance sheet risk, very low. It has almost enough cash to cover all the short-term interests. Considering even 1 quarter, especially with some of these credits, it can almost eliminate all of its debt right away, short term. Long term, it just opened up a huge facility, which was partially bankrolled by the government. Bullish on Intel, but let me know what you think. And let me know if you want more DCF, discounted cash flow. I have my criticisms of it, but I like PEG ratios. So let me know what you think. Let me know if you learned something. And let me know if you think that considering reading the earnings and listening to the earnings is a good thing, or I'm just out to lunch or something. Thank you very much, friendos. I appreciate your time, appreciate your effort, and I appreciate Intel finding a way to almost reinvent itself after losing the AI race, becoming going into new market, going into this blue ocean market of advanced microchips and doing well there. I'm interested to see what's going on. What company would you like to know more about next? Thank you for your time. Thank you for your effort, and we'll catch you on the next one. See you later, friendos. Stay based, and until next time.